Okay, you get me, because Brentster just messaged me that his computer froze. So I've got the intro for you. We are live. We are talking about a Thursday where I thought it was going to be turnaround Thursday, but they pulled the rug out from under this market here again, and now we're tanking. So interesting markets we have here. Chop is the word of the day. Let's run this intro, and I don't know how to do it, so I'm going to try to go find it. Bear with me here. I suck at this. Banners. No. Media assets. No. Intro video. Yes. Let's try this. And PMP intro. Uh-oh. Don't know how to do it bringing Christian live.
Oh, good morning.
How we doing? Tried to run it. Epic fail.
When that doesn't work, Dennis, then you have to sing or something. Like you got to hum along or something.
Wow. I don't know. I try to click it. I don't know how to do any of that stuff. I've been taught it before, but I'm like missed my window period for all that stuff, I think. So anyways, yeah. The Brentster's computer froze right when he was getting ready to do the intro. So you guys are stuck with me, but we are live. We are rocking and rolling here. And Christian, how was your day and how was your evening?
Not bad. Let's. I'll save you by going through some markets really quickly. International markets. Hang Seng was down about 0.6 of a percentage point. 0.6%. Shanghai was also down about 0.4. So a little bit of red in Asia overnight. European markets about flat. Euro Stoxx down about 0.25%. DAX this morning is leading lower, down 0.7 of a percentage point. Let's get to S&P futures. They are down about 0.3 of a percentage point. NASDAQ futures are they are down also down slightly, 0.2 of a percentage point. Same thing with Russell futures. Small caps really never got going yesterday. They had I don't want to say an epic fail, but they failed to rally yesterday. Almost gave back all the gains yesterday. They're down about 0.2 of a percentage point this morning. Let's take a look at what bonds are doing this morning. 30-year bond futures. They are sinking a little bit, down about 0.3 of a percentage point. You could also see like the trajectory there in bonds, kind of heading back lower. They got a little bit of a bounce, but are starting to come undone a little bit. Let's talk about energy markets really quickly. Crude this morning is down 0.6 of a percentage point. Has had a little bit of a rebound recently. Nat gas futures this morning, essentially flat. Nat gas futures move a lot, so they're up like fractionally this morning of about 0.3 of a percentage point. Look at that big reversal that we had about a week ago. Also, copper futures, probably leave it here. We'll do gold as well. Copper futures have been strong recently, just down 0.1 of a percentage point, but one of the stronger commodities recently. You can see a nice little move here that we've been getting in copper futures. And gold, which I have my eye on this morning, is up 0.4 of a percentage point this morning. We are pushing towards a possible breakout back in gold again, up 0.4 of a percentage point. Last one, we'll say silver. And silver's down actually silver is down 0.1 of a percentage point. Also, not a horrible looking chart right now. We don't have a lot of charts that are up and to the right, but gold and silver look pretty good. All right. So, yeah, how you doing this morning, guys?
We're doing good. The Brentster is here. Getting ready to do an awesome intro. Like I even heard him rehearse it in the background. And his computer froze right as he was getting ready to do that
Literally
intro. So
right.
I jumped in for the save. My intro was brutal.
The chat wanted you to sing a little, Dennis, did I hear?
I don't know. They wanted me to do something. I just stood there like, a deer in the headlights. I'm like, oh my gosh, what do I do now? I'm live. I don't know what to say. And then I tried to play the intro video, Brent, and I couldn't find it. I'm looking all over there. It was just a disaster of an intro. Disaster. Okay. So jokes aside here, it wasn't that bad. We're down. We've given back the overnight rally. We remain the same theme here. Sell the rips, continue to work. Tech tried to hold the rally a little bit better yesterday, though, Christian. So does that give you some hope? Because tech did hold up better. Stocks like NVIDIA were very strong. closed near the high. We get good Intel news here overnight, which we're going to talk about here in a second here. But Christian, you were getting down and dirty and starting to, buy the dip a little bit in some of these tech names.
Yeah, I've got a couple names that I added yesterday, which I talked on the show yesterday. But I will say, just to kind of talk about the overall market, we had the beat by the CPI yesterday. Markets rallied a little bit. You could see right here, this was the candle at 8:30 in the morning. But I was disappointed in the price action yesterday. We really didn't go anywhere. We kind of sold off again. We came back a little bit middle of the day, and then once again, another weak close yesterday. But the last couple of days, I maybe the positive, the positive, if you want a positive spin, is we haven't gone lower the last couple of days, but we also haven't really done anything. And I was surprised that the lower tick in CPI didn't get some buyers into the market. Here's what the Qs look like too. Qs, like, as to your point, held up a little bit better yesterday, but also just really can't turn the corner of going higher. So patience is important, I think. And also with kind of what I don't want to say we've got a bear market yet, but I will say that it feels like a bear market where this market is kind of wearing you out a little bit.
Yeah.
So yeah, so that's kind of my thought from yesterday. You mentioned overnight futures really didn't kept going. We do have some more economics this morning at 8:30. What do you think? Does that get us to turn the corner, or you think we get more sideways?
I mean, we didn't rally on a light CPI number yesterday. We tried to rally. We actually were up for a long time, and then we give a lot of it back. IWM obviously is the most sensitive to interest rates. You really want to see that take off. They didn't go there, though. They went to tech. They went back to tech. So, I mean, if we get a light number on the PPI, do we rally on it? Well, we didn't rally on the light number CPI. So we'll rally initially because the algos will buy it, but will it hold? I think we're just in this issue where we have a lot of overhead supply. And that is because you have a lot of people fully invested in this market. And, they were in for Trump. They were in for, other reasons as well. But in because the US market's been the best place to be for a very long time. And that is, being unwound here still, like the tech trade unwound, but other trades being unwound here too. So it's difficult when you have so many people who are underwater for rallies to be sustained. And, retail's been quiet to a certain extent. That's mainly because we know that, a lot of those traders are in a lot of those growthy names. And, there may not be a bear market overall in the S&P, but there is definitely a bear market in a lot of those growth names. Some of those stocks are down 40, 50% from the highs. So
I want to talk about a name that you mentioned too yesterday, because so what I'm looking at right now, this is value, which underperformed growth drastically yesterday. You were talking a little bit about consumer staples, and you were talking about a safety play. And here's what consumer staples did, by the way, yesterday. So even though consumer staples have been we're holding up fairly well, we're outperforming a couple days as there's a little bit of flight to safety. If you were hiding in consumer staples, you got smoked the last 2 days, this week, since the beginning of this week. And you mentioned this guy, Apple.
consumer staple.
You made it. You made a nice call on this. You said, "Hey, this name might underperform."
Yeah, because we had a tech rally yesterday. Now everybody naturally, the algos are like, buy Apple, it's going higher. But unfortunately for those algos, those dumb algos, is that Apple has been trading with the consumer staples for a while. Has a tech component to it, but it also has a consumer staple component to it. That consumer staple component is this. It is the iPhone, because this is now a staple. So if you look, I don't think it's a coincidence that Apple started rolling over heavy when those consumer staples started rolling over 3 days ago. You had the big reversal day when XLP was up over 84 and then closed really weak. Apple started falling that day, and then 2 days of weakness along with the consumer staples. Now, it's not going to necessarily just rally hard with the consumer staples because there's a tech component to it too. But it's mostly a staple right now because they haven't had these huge tech innovation, so you're really, buying the iPhone. And I think it's been a defensive play for that reason for a while, where its beta is lower. But when the consumer staples really started rolling over a couple days ago, which we warned you about last week, if you go back and hear the show, I'm like, if you're coming in these staples, this is probably eventually trade's going to come undone too, and it has. So Verizon maybe was the catalyst there when they warned. Stock was ripping higher, and then they warned, and the stock got beats. So I mean, you just got to be careful when they start selling. They start selling, and sometimes consumer staples are defensive. They move opposite to tech. Tech had a pretty good day yesterday. Consumer staples were down. So as much as a lot of people say the fuel for bull markets is rotation, the fuel for bear markets is rotation here too, because we had a lot of good tech stocks flying yesterday, but the S&P couldn't catch a bed because there was a lot of value names selling off.
It does. You bring up a really good point here. Is it because it kind of feels this way to me right now, and things could change rapidly, but it kind of feels like a little bit of a rolling bear market. Things rally, just as I was talking about consumer staples, right? And then they get a major rejection there instead of a breakout and head lower. That to me is it's a characteristic of a bear market when things try to break out and they can't do it and they get slapped down like this. So for now, and again, this could change very quickly, but just feels like we've got a little bit of a rolling bear market because things are going down faster on the downside than they are things accelerating to the upside. So it was a growth day yesterday. It's going to be interesting to see if that can continue because there was nice. I think that was the one thing that people focused on yesterday was like, well, growth stocks did really well yesterday. So I just am very more, cautious being that it could be very short lived considering these rotations and how bad things like after they rally a little bit, how fast they go down. So I think, you mentioned a couple names that I started yesterday. Yeah, I mean, I talked about Broadcom. I just like that we're at some support. So I did put on a couple starter swing positions. When I'm looking at the weekly chart like this in Broadcom, which we talked a little bit about yesterday, I mentioned that we've got some support here, but this isn't going to be like I'm going to try to hold this as long as it stays above 183. If it doesn't hold there, I'll be out. But yeah, I would like to be in this for more than like a day or two. Same thing with Amazon. It's kind of almost like a similar pullback to support. So I tried two of these names again, starter size, because I don't want to really commit anymore considering how difficult this market is right now. But
Yeah.
so that's a couple new names, and we'll go from there. Do we want to get to some news?
I'll just
Yeah,
comment
let's
on Amazon. I
Yep.
do own Amazon in my long-term
go for it.
portfolio. I have considered adding to it. I said I would add under 200. I haven't yet. I'm thinking about it. Again, just we're in this market here where it seems like every time you buy something in the long-term account, you regret it 3 days later. So I'm thinking the same level. AVGO, I talked yesterday. I liked your 180 as well. News-wise, Brentster, we should start with Intel because this is your good news of the day.
All right, let's start with Intel. They announcing a new CEO, and what are shares up right now? I saw it was up like 9% earlier. I think they might be even moving a little bit higher since then. What did you think of this news, Dennis? Did you think it warrants a double-digit percentage move higher?
Yes, I think it's
Yes, right
it's
away.
what Intel needs. Intel needed new leadership. We've talked about this for a while too. I've talked about this as a shareholder, a very unhappy shareholder, and I've sold almost all my position at a significant loss, deserved because I was trying to, buy the laggard of the sector, buy the dog, turnaround story, be the hero. Hasn't been. The question is, so yes, this is a good move. Need new leadership. They're going to talk about obviously doing a lot of changes here with Intel. This is all really good news for the stock. The biggest issue for Intel, though, is going to be the type of market that we're in, that Christian was just outlining, is that we're not in Kansas anymore. We're not in this market where new leadership, 2024, that's going to turn. We're going to go 23, 25, 28, and just go. Overhead supply all over the place in this stock. It has tried to build on this rally overnight. It really hasn't. It's kind of been stalling a little bit overnight here. Do I think it could rally on it? I think it could. We really need the market to help it, though. So if this market starts to roll over, everything's going to roll over with it. Trump is driving the bus, unfortunately, right now, even for Intel.
Yeah, there's a note out this morning. Intel's new CEO hired to revitalize manufacturing process leadership. This came from Roth, and they keep a neutral rating on the stock with a $20 price target. I believe the CEO is from. Do you know where the CEO came from, or has a past at?
Let me look real quick, see if I can find that.
I have it. I have it. I just wanted to see if you
Oh, it was
guys.
a question? No, I don't know. No, I didn't see
I,
it.
I believe it was the old CEO of Cadence, and if anybody wants
Okay.
to double check on that, but yeah, Cadence, which so sounds like a pretty quality CEO, but like anything with a turnaround story, you probably have to have some patience as that plays out.
Sure.
That that's it. I think you got to be very patient with Intel, and we've been patient for a long time, and investors have been patient with this one for decades. It's really just been a dog. Guilty until proven innocent is probably what the market is going to do. I mean, we had a significant pop on it yesterday on a decent news, and the stock gave it back. Now, this is the best news you can possibly get. So, again, I'm not coming in here shorting. People are asking, is shorting Intel? I'm like, no, because in normal markets, I would think it could even build on this, but we're just not normal markets. So I'm not sure how much, if you're shorting it, I get it. That everything it seems is blindly shorting rips, you're making money. This is really good news, though. So I'm just going to sit on the sidelines here, not buying it, not selling it.
And then
Gotcha.
also just saw a Bank of America upgrade away from sell rating, just to add on to what you saw there with Roth Christian. We do have about 14 minutes here before our PPI reading for the month of February. You guys didn't preview the PPI figures yet, right?
No, we did not. So can you
Let's
do that for us?
Let's do it real quick, and then we'll jump over and cover a couple of earnings. So again, PPI 8:30 a.m. Eastern time. The base and the core reading on both a month-over-month basis up 0.3% expected. The base reading year over year expected up 3.3%, and then the core reading, which excludes food and energy on a year-over-year basis, expected up 3.6%. We are going to be breaking in with that news right as it's breaking. Dennis, do you have an expectation that you're going to be caught in the weeds trading here for this PPI number like you were yesterday?
I'm going to sell the rip. So sorry, guys. I'm not trying to, rain on your parade here, but I mean, we saw it yesterday. RIP took a while to get sold. I don't think it takes a while to get sold this time. I think if we bounce on a late number, I don't think it holds. That's unfortunate because I really think, there's certain stocks that are starting to look productive here. But
Yeah.
if we bounce up, let's just say we rip 30 handles on this PPI number,
Mm-hmm.
I'm going to be actually trying to sell the rip.
Well, that has worked every time in the last 3 weeks. So
It's working better than buy the dip ever did.
right,
I mean, sometimes I just think like blindly, like last night, you just blindly go sell last night's rally, not even thinking about anything. I mean, Tesla might be, another one to talk about here too before we go into, the earnings parade. But
Sure.
Tesla last night, yesterday, we get news. Last night, Kramer builds on it, comes out on Mad Money, says to buy Tesla. He was, he had his technical analyst was saying the stock could double from here. Stock was ripping higher on the Mad Money love. Was trading up over 253 last night. And you're like, okay, it's going to be a really good day for Tesla. It's going to be like, it's moving. Jim Cramer's behind it here now. And here you come in, and it gives it all back and is now trading red. There is a headline here, which I'm blaming to a certain extent, but also the market turnaround is not helping it.
So what was the headline that you had
Yeah,
on
so
your
the
radar, Dennis?
headline is that they are working with Baidu in China to improve their mapping, I believe, on their FSD. The concern I have with this headline, and I liked it because I'm long Baidu, and Baidu popped up on this. The concern I have this is that Tesla's told us the whole time that they kind of insinuate they don't need anybody else. Second, they've also talked about, everything being optical, with camera systems. I don't understand why they need to, improve their mapping systems here if they're going full optical. So I'm kind of confused here.
Yeah.
And again, maybe I'm reading too much into this, but I think the market's maybe reading the same thing because Tesla's really starting to roll over here now. Is if your camera system's going to work, why do you need to worry about improving the mapping system? Because we know Waymo operates on mapping systems. We know in China, Baidu and all of them are operating, mapping, like mapping out the roads and understanding where the roads are. Tesla's supposed to be working on an optical solution where they can go anywhere. It's visual and it just works. So telling me maybe their visual, is not where it needs to be yet. That's what I'm concerned about.
And Christian, you were kind of like taking the other side of this a little bit, just saying like, isn't it good that they're just getting more information in China?
Yeah, I don't know. It's tough with China because you don't really know what's going on over there. What Dennis says sounds right to me, that they should probably have that mapped out already, or their technology should be able to do that. But then I
Yeah.
think as well that China's a communist country, and I don't, like maybe some of the like details about the roads need to come from someone from China. But yeah, I don't know. I'm not smart enough to know whether or not Tesla should already have that information.
I mean, here's my concern. Again, I've followed this story very closely. I've followed this story very closely for a long time. Is Tesla used LiDAR back in 2018, 2019. They took it all out of their cars 5 years ago because Musk said it's a crutch. He said it's the solution is visual. The solution is through cameras. And anybody that's stuck, on LiDAR is going to, fall behind. So I still don't totally understand why, they need to do this deal with Baidu if they're so confident that their visual systems, which they're going to try to launch in, obviously, they're talking about Austin here, I believe it is, later this year. So it's just telling me maybe, they're like looking to Money Mitch just said, the combo approach. But that's kind of contrary to what he had talked about before. So I'm just somewhat concerned here, and maybe I'm reading too much into it, but that's my thoughts. Is like, why do you need to do this mapping deal with Baidu if you're going to have the camera system? So just repeating what I just said, I believe the combo approach might be the best approach, but Musk has never conveyed that message. He threw out LiDAR 5 years ago, so
Yeah.
that's what I'm interested in.
We got about 7 minutes here before our PPI reading at 8:30. Let's see if we can get to a couple earnings reports real quick. Looking at Adobe here last night, reported a beat for the quarter, 508 versus a 497 estimate. Sales also beating about 5.7 billion. Guidance, however, was just a little bit light. They're expecting Q2 adjusted earnings $4.95 to $5. The estimate was up around $5. And similar story for the fiscal year 25, adjusted earnings expected 2020 to 2050, estimate at about 2040. Dennis, what did you think of this report here last night? Shares right now trading down about 7%.
I mean, the report was fine. We're just in a tough tape here right now. So the guidance is kind of in line. I mean, you're going to be nickel and diming here for 495 versus 5 versus 5. It's basically inline guidance. So beat, inline guidance. Doesn't matter. We're not in Kansas anymore. And the market, like I've said before, there's an argument. I bet you some really smart hedge funds out there made a lot of money shorting all stocks into their reports, like every single stock. And I've talked about this, certain times where if you just flat out said, I'm going to short every single stock into its report at the beginning of this earnings season, I think you made a lot of money. And that's because the stocks that popped on their earnings, like Broadcom, which had great earnings, didn't hold and came back. And the ones that reported disappointing earnings got killed. So it's like, okay, and that doesn't work for every stock. I'm sure the chat's going to find an exception to the rule. But it's worked for a lot of them. Okta was one that was an exception to the rule. It hasn't given it back. But there is like a lot of stocks that have given it back here. So it's tough holding stocks through reports. And there's an argument to be made that we should have just been short every stock in every report, because I tell you, the winners on the short side would have made up a lot for those losers that gapped up. And a lot of those losers that gapped up, talking about, the stocks that actually beat, have given it back. Tough market.
Yeah, I think the guidance is the issue, and just what the catalyst could be for Adobe going forward. I see a lot of price cuts this morning. Mizuho's, Stifel, Bernstein, KeyBank, all these brokers are out with price cuts this morning, so they're not embracing the current quarter either.
And then a
Stock has
couple.
support at 400. It's psychological. The 2025 low is 403. I would expect that to be an initial area of support. Tech was rallying yesterday. I'm very curious how it responds today. Do we see, a dip here early? Do we see, maybe the PPI? I don't know how the number's going to come out, but do we find tech getting support here eventually? I think we might. Part of me wants to nibble in. I did buy a little bit of Robinhood. I did buy a little bit of Qs, in the longer term account, but it's tough. It's tough environment for the bulls here. Sorry.
About 4 minutes here before PPI, and then we're going to be having Jim Tassoni on at around 8:35 or so. Maybe we'll bring Jim on a few minutes early. Let's see if we can squeeze in one more earnings report here. We'll go over to more consumer-oriented name, Dollar General. How about Dollar General next? Pull up those numbers real quick. Saw a couple people talking about Dollar General in the chat.
Yeah.
A mixed quarter. Looked like they missed on the bottom line, but the sales beat 10.3 billion. Guidance, similar story here as Adobe, expecting fiscal year 25 adjusted earnings 510 to 580, a large range that their analysts up at about 590. But what do you know? Looks like Dollar General is trading higher here, about 8% today this morning.
This is just like dumpster fire of a stock it's been, and the quarter was not great, but it's a matter of like the bar was like below the ground and they would have had to dig to get under it, and they did try to dig. They actually tried to get under that bar. So the quarter is not good whatsoever, but the stock has been such a disaster. Expectations were just so low that somehow the stock is rallying on this report. Am I buying it on this report? No, probably not. I mean, chasing it up on bad reports. I'm not chasing good stocks on good reports. So I think, again, a 5-point pop. It's more of a short squeeze probably than anything, or just, a relief rally here. But, the stock was weak the last couple days coming into it. But the stock's just been an epic disaster.
Do you ever mess around with any of the dollar names, Christian?
I mean, I think that Dennis is spot on with this. I think it's been so beaten up. It's not an expensive stock, so there's so much bad news priced into it that the bar is set so low. But I buying the stock, no. I would rather not. I mean, I've liked what's been going on with BJ wholesales, but those, it's really tough with retail right now when you start to hear about uncertainty and the possibility of a recession. Retail becomes a very difficult group.
Yep.
I'm going to bring up the estimates, so I'm going to stop my screen here for a second.
Okay, sweet. Christian, real quick question here from Lalo. He asked, what charting software are you using? He said, is it TradingView?
This is TradingView.
Cool. Sweet. Thank you. Thanks for that question, Lalo.
We're a minute and a half here. Just get ready for some chop, get ready for some volatility here. Again, my strategy going into this number is to sell the rip. So maybe wrong, but I'm probably going to try to sell the rip here. So I'm going to get quiet here probably when this number comes out. I'll try to stay with you guys. If there's not a rip, we'll continue the conversation here. Obviously, Brentster, Jim Tassoni's in the background too. If you want to bring in Jim early for this number, feel free. Jim's just coming in here. Actually, he's there. He's turned on, but he's not there yet. So
yeah. Let's give a quick preview here. So we're expecting a month-over-month reading up 0.3% for both the base reading and the core figure. Year-over-year, we're expecting up 3.5% for that core reading. Check the clock here, about 45 seconds, folks. And
we also get initial jobless claims too for the week.
Oh, good call.
We'll hit that afterwards, but
cool.
I think people are looking at what this PPI number. I mean, it's going to be interesting too. I know that I'm wondering if tariffs might come into play too with this number. We'll see very shortly in about 20 seconds.
And Blue yesterday, Blue was saying there wasn't any tariffs in the CPI number. I don't know why that would be different for the producer side of things, but that's what Blue was saying yesterday. Got about 5 seconds here, ladies and gentlemen. PPI for February expecting up 0.3% on a month-over-month, lighter than expected. The core reading up 0.2%, and it looks like the core reading was actually down minus 0.1%. Expectation was for a 0.3% increase. How is the market reacting here, guys? If you guys aren't trading your brains out here.
Well, initial rip, it was like 0 seconds. It actually went scratch, and they just couldn't even hold it for a second there. So we'll see if we can pop a little bit back here with humans. But the bots bought it up to flat, and then they gave it right back immediately. Like it wasn't even up there for 1 second. So I couldn't even get a chance to sell that rip. It wasn't there. I mean, if you had your orders sitting out there, you would have got done. But to sit them out there ahead of a number is, not a great strategy ever. So I don't know. I don't think it's going to hold.
Yeah. So let me just go over those numbers again. If you don't, Christian, if you don't mind, could you share that again? I mean, I can check.
Let's see.
Let's look at the numbers while we're going over them real quick, and then we'll give the jobless claims numbers also. Thank you, sir. So the core reading here, down 0.1%. We were expecting up 0.3%. On a year-over-year basis, the core reading up 3.4%. We were expecting a 3.5% increase. And then let's just hit those jobless claims. Blue a few weeks ago was saying that the jobless claims, the continuing claims, was going to be an important metric to look at to know if we were a recession. After he said that, I started focusing on this weekly number a little bit more. So weekly jobless claims for a couple weeks ago, for last week, 220,000. Expectation was for 225,000, and that continuing claims figure from a couple weeks ago, 1.87 million. We were expecting 1.88 million. Looks like Jim's listening in here. Let's bring Jim in. Why not? And get his take here on this producer side inflation. Jim Tassoni, CEO at Armor Wealth Strategies. Jim, how's your morning going so far?
We're doing okay over here. We're playing a little bit hurt in the Tassoni household. Flu, cold bug going through. So if I sound a little nasally, apologize in advance. But
that has been nonstop, nonstop in Canada. Like one thing about the U.S. coming to take over Canada, they better consider that again, because you're going to take over a lot of flu bugs and a lot of cold bugs because the entire country has been sick for 3 months.
That's how it feels.
Think about that.
Here. No, that's how it feels here. On my daughter's school's dropping like flies. Half the class is out every day. It's just it's been a mess. But hopefully we're heading into the warmer weather. Some of that'll abate here.
There's the optimism. Spring is around the corner, guys.
Yes.
I want to just talk the number that just happened here. So we've come in light on the PPI. Initial jobless claims slightly light too. They're going to try to find a reason for the sell-off. The reason that the market is selling off here is because this market just doesn't seem to care about. And this is actually pretty good data. It's very extraordinarily disappointing that we didn't get a pop on it at all. The algos bought it up 20 handles. If we could show the chart here, I mean, maybe you could see it. It was up there for a millisecond, and then we start to give it back. Like we're trying to come up. But if you gave us this number, PPI minus 0.1%, versus plus 0.3% estimates a week ago, or even a month ago, the market's up like 50 S&P points on it. There's so many people who are just spooked to buy stocks that the algos, aren't even following through on this. Jim, I want to get your thoughts here. Maybe we could come and go green here. Maybe humans, intuition can come in here because the number is pretty damn good.
Yeah, I mean, this is definitely what I've been seeing. And I actually was texting with Joel over the weekend when I was looking through my charts, and I just said, gosh, this has definitely been some bear market action where every time we think we see, whether it's economic data, earnings data, administration rhetoric, every time we seem to have a reason to rally and the market gets up off the mat and starts to try to make its way higher, we just see that getting sold into. We see rallies unable to be held. It's the reason why, and I told you guys this in a message, that I put a hedge on via SPY short last Friday, right at about 570. I'm actually thinking about possibly taking that off today, though, because I tend to use these hedges as short-term, whooshes in the market and things like that. And so I think right now, although I am somewhat pessimistic about the markets, and I have been since the beginning of the year, I have identified a level, and my level here on SPY is 552. And I think you actually have, I think that was right about Tuesday's low. I think you have a tradable level there to hold against if you want to try to establish longs, whether in indexes, sectors, and or individual names. I think if we can hold 552 in SPY, we can at least make an effort to stabilize and maybe have a move higher. I think, though, like you've said, Dennis, and you've said, Christian, for months, I think any type of pop needs to be sold into. Profits need to be taken. We need to be really active in a market like this because, and you guys mentioned it earlier in the show, one of the issues that I've had the last few days or even week is you get the call right, you get defensive on the market. My hedge worked, but then it's like, okay, I'm going to hide out in defensive areas. I got longs in staples, I got longs in utilities, and I'm getting my what kicked in the defensive areas of the market right now. So it's a difficult market to play. Luckily, my commodities have been doing fairly well. I've had some decent hedges on, but it's a tough market for sure.
I mean, Jim, you think about Warren Buffett sitting on his like $350 billion in cash here right now. The problem is with cash is the rates are starting to drop here too. It looked pretty good when 5.5% or 6%, but as it starts to come down, it's like, well, we're not even beating inflation anymore on some of these rates that we're getting. So that puts more pressure on. I just want to get your thoughts. Is cash an option here, or is it too late to go to cash?
I mean, like you said, it really depends on what you're using the cash for. I mean, if you're using it as opposed to, if you're not interested in tactically playing shorts or things like that, if you're using cash as I think the market's heading lower and I want to avoid those losses, then I think cash is always an option, because at the very least, even if you're only earning 3.5%, 4% on your cash, you're not going down 5, 10, 15, 20%, and you've got it ready to deploy. Now, the key is, do you have a strategy for if and when you want to deploy that? And so I don't necessarily know that cash is a great investment here to say, I want to put my money in cash and have it sit there for the next 2, 3, 5 years, or even 6, 12 months. But I think if you're worried about the markets, and for me, if we break and close below 552 on the SPY, I think we're going lower, and maybe significantly so. So I'll be tactical at that level, but at that point, shorts, cash, I think it's better than riding that train lower.
Jim, any specific stocks that you're looking to nibble on here?
I actually started to look at some of what I'll call these more defensive tech names in the last couple of days. I'll have them on a short leash, but I've been looking at Google, I've been looking at Meta. I know these aren't exciting, out of the box names, but I think there's been, the sell-offs in these names bring them down to a point where I'm the type of, when I'm looking at what I'll call my trading account, which is that 1 to 3 month time frame, what I like to see is stabilization in names and then momentum return. And we obviously haven't seen that momentum return yet. I think the losses are starting to abate. Now we'll see how today goes, but I want to watch for pops in these names for momentum to continue. And so in a name like Google, for example, I think, we're at a point where I was hoping we could get back above the like 167.10 area. We're trading at like 166.30 in the pre-market. We get above and close above like 167.10 on Google. I think that's an area you could look to nibble in a stock like this. Meta is actually, I think, a little bit more attractive to me. We're trading. I would love to get Meta at 600. I don't know. Maybe we'll see that sooner rather than later. That would be a place that I would really like to initiate.
Well, we saw it yesterday, Jim.
Yeah,
Meta
but we
was there
didn't see it
yesterday.
again. I didn't get it yesterday.
Yeah.
So, I think if we could, we've popped up to 618 now. If we get back and test that 600 level again, that would be a place that I would look to initiate. Again, holding a short leash here. Another area that I liked since the beginning of the year, I exited, but I'd love to be able to nibble again, is financials. I still think
before we go to financials, I'm just going to mention one thing too. I like what you're doing in terms of, mentioning kind of mapping out where you would get involved in this, because some technicians, it depends on your opinion, like to see like a retest of those lows. Yeah. So if you do, like, we got a little bit of a bounce here, obviously, yesterday. And if we come back and retest there and hold, and that's right around your 600 level, I'm down with that. I think that would be a nice like retest, because sometimes that move, like, it gets people like excited that the from a sentiment standpoint, that the corner has been turned, and then when you get that retest of the lows, people get really like, oh geez, we're not turning, we could be going lower. So I think that would be a great point of this. If we come back here and Meta comes down and retest that 600 level, holds it, and then builds off of there, I would like to see that as well. So I'm with you on your Meta call.
Yeah, no, and that's I think, we're starting to see, and again, it's an interesting market dynamic right now where the overall market looks pretty weak to me, but you're starting to see, some, I guess, changes in sentiment towards sectors and names. I mean, the last few days, even with a weaker market overall, we're seeing tech start to outperform, and people have talked about it before. Like, are some of these larger tech names actually the place that, if the market really starts to fall apart, that people are going to want to hide out in, that people are going to want to own, because these are the names that are still going to be our strongest names over the next 1, 3, 5 years. So finding places to enter and not chasing, I think, in this market is a prudent strategy.
So, Jim,
I
you were
just
going
don't
to
like this tape action though here too, Jim. And is there a case, like, I know everybody wants to be the hero and call the bottom here, is there a case where we go much lower? Because I don't like this CPI yesterday. Market really didn't rally much on it. PPI number is pretty awesome actually for the markets being light. And we can't rally on this either. Is it just, maybe, just late? Like, or is a rally bugs coming in here? But like from the tape, and I'm basically just reading the tape. I'm like, you always say, when a stock starts selling off on bad news, the bottom's close to being in. Well, when stocks are selling off on good news, it doesn't sound great.
Yeah, and I'm with you, Dennis. This tape action is ugly. It's indicative of a bear market, and I don't want to be, Chicken Little, the sky's falling. I want to be prudent. I want to follow, my areas of value, my indicators. But at the same time, like I said, I had a short hedge on. I'm probably going to take it off this morning just because I don't want this thing to, I think, at least at the levels I look at, we're getting a little bit of exhaustion in that selling. But at the same time, if we get below, at least what I'm looking at, if we get below 552 and close below 552 on SPY, I think we're in for a significant correction, a significant leg lower. And that would be an area that I would probably look to put those hedges back on, put those shorts back on. I don't like the tape. I'm with you, but at the same time, I want to at least be able to take trades where the risk reward lines up. I can get long in certain names, but I know. Did I freeze up on you guys?
Yes,
Yeah,
but also
the whole
I did
show
too.
froze up.
Yeah, that was
Yeah.
weird.
Yeah, me too. So I don't.
Okay,
Just the
glad
show.
it-
So
All right, so it's
Interesting.
not just my technology then.
we're
Okay.
back.
it's the
Chad is
Russians.
saying we're
It's the
back.
Russians. The Russians just said no ceasefire, and now there's Russian hackers coming and hacking
I-
our show
Oh,
here.
I just
No.
wanted to say something because I think what Jim is saying is like, it's okay, by the way. Like, I know it seems like everybody is in the same boat where we had this market and we're trying to look for a bottom and we're trying to basically say, okay, is this a buyable dip? And it's okay to be like, well, I'm not sure. I'm not seeing some of the things that I really want to see yet in this market. So be patient. I mean, there's no reason to say just because there's been, a market dip that you need to get all, back in. You could try some nibbles in some things,
Yeah.
but you also have to understand too, like, we're talking about a couple of trades that I put on too. Like, if those nibbles don't work out and we start to break lower, then you have to kind of, reset and say, hey,
Mhm.
this market isn't done going down. And, I don't think that we've seen a real good sign of like a capitulation. Like, that certainly hasn't happened either. So I think be patient. I think we also have a Fed meeting next week. Anybody think that the Powell is going to come out and say something different next week on Wednesday?
No, I think he's going to be,
Yeah.
concerned about the escalation in the tariff war. I think he's going to be looking at this data and saying, yes, the data is productive, but we don't know the effects of the tariffs. So I think the market would be epically disappointed if he said that too. And I think he's going to say it. So
Mhm.
Powell is one that has never really cared too much about markets going down. We've seen that before. So there's been other Fed officials, they're very focused on the market. He's always been focused on the data, but the Fed has already said they don't know the impacts of tariffs. We still don't know the impacts of tariffs. Hell, they just went in a week ago. So, we're not going to see any of those impacts yet. So for them to people calling for 5 interest rate cuts this year is definitely early to make those calls. TLT, you can look at that as an indicator, but it can give false readings here too with the recent rally because TLT is a risk-off instrument when times get tough. So, when you just look and say, oh, well, if TLT is going higher, the Fed's definitely going to start to cut rates. I don't think that's necessarily the case. I think TLT is going higher for a little while anyways because people are just hiding out of equities. So lots to consider here, but the tape action right now, today and yesterday, is the most concerned I've been for a while because we got data that really we should have rallied on and we didn't.
Well, what's interesting here too, this is the screen that looks at Fed fund futures and the probability of what's being priced in terms of a possibility of a interest rate cut. So we've got the meeting next week, which is the 19th, and they're not expected to do anything there. But what I'm interested in here is what they're thinking for the May meeting as well as the June meeting. And what's interesting is that this May has the May meeting, which is on the 7th. The probability is dropping. And you can see it just dropped again. Just a couple of days ago, like over the weekend, it was over 40% chance that there was an interest rate, the possibility of an interest rate cut coming in that May meeting, but it has dropped from below 40 to all of a sudden to 28%. So I'm not sure what's going on here. Why Fed futures are now discounting when the Fed is in a quiet period. We haven't heard anything from them about the chance of a interest rate cut.
I think it's the trade war. I think they're looking at this. Traders are looking at this and saying there's escalation here. now it's with Europe. It's continuing, and I think this tariff war here that we're having is showing up in those numbers as well. And if I'm a Fed, I would be sitting back and waiting too. Like, I know people would get ticked off saying that. I would not be cutting rates right now. No way. Not knowing what is going on here, not at all. Because you can't risk inflation coming back here. I know Bank of Canada's cutting aggressively, but Canada's got all kinds of problems. So if you're Canadian, I'm talking to my brother-in-law yesterday. I'm talking to different people, talking to my realtor. Things are slowing down just a little bit. So, but with what's happening, obviously, with tariffs coming in and our biggest trade partner, Canada's got all kinds of issues. So I understand why Bank of Canada's cutting rates aggressively. But if I'm sitting here in the U.S., stock market still isn't really down that much. The wealth effect really isn't impacted here yet. S&Ps have held up very well. I think talking about, 5 cuts this year or 3 cuts, I think it's preliminary. And I think the Fed's going to sit back and wait to see what these tariffs do.
Yeah, no, and I agree with both you guys. I think, and the problem is it's the uncertainty, right? And the tariffs breed a lot of uncertainty, and just boots on the ground, anecdotal evidence, talking to business owners and also people who are that I know that are in recruiting for very large Fortune 100 companies and Fortune 500 companies. And they're talking to executives in these companies. And the executives are saying that, these companies can't pivot on a daily basis based on the trade. The tariffs are on, the tariffs are off, the tariffs are on, the tariffs are off. They can't move. They're like battleships, and they can't move like that. So what do they have to do? They have to pause. They have to sit back. So does that affect CapEx over the next 12 to 18 months? How does that affect, business spending and different things within the economy?
It's uncertainty.
Yeah, these large corporations are sitting back and saying, we're going to do nothing until we have more clarity in our forecasting. And that causes stagnation.
Plus, I think what's also weighing down in the market is the possibility of tariffs on alcohol. Nobody wants higher wine prices. That just rolled across the tape about a half hour ago. I'm making a joke here, but nobody wants to
especially in a recession.
Right.
I know.
So,
we all need some alcohol right now.
Right. So that's also, I think, weighing on sentiment this morning.
Jim,
question for you, Jim.
Go for it, Christian.
So you had a couple things that you were looking at. Which one? I'll leave it up to you. Which one would you like to talk about? International or financials?
We can talk about, the international trades might be a little bit different. The financials we've talked about, they're not that differentiated names. Some of the banks here, I think, could be getting interesting after the sell-off we've had. But the couple of international trades we had, and I owe kudos to you, Christian, especially on the second one that I've been looking at, and that's this EWS. We'll kind of leave it with this trade here. It hasn't, it hasn't come to fruition yet, but we're sitting here, for me anyway, right on a level like this $23 area in this EWS ETF, which is Singapore. I think this could be, and we had a huge run on this thing, but now it's pulling back a little bit, consolidating a little bit. I think this could be an area, again, in this market, you want to have things on a really short leash. But I think right in this area, this could be another nibble opportunity where I think from a technical standpoint, you're sitting at some support here that could work out nicely for you for a move back up, above 24.
Yeah, it is a difficult environment to say, to kind of go all in on one of these trade ideas, but I think this is possibly something to it. We're still seeing international outperform a little bit. I want to just talk a little bit about, and again, I don't mean this as a negative thing, but I know you had a trade in that was kind of commodity based, which I thought was an interesting idea too, which was Australia. Sorry to kind of go
No.
down a bad note here, but this is
Mhm.
just, I think, what we're seeing in this market right now is glimpses of things that look pretty good. And, I still think that this could come back because I think commodity based right now, and maybe China getting some natural resources from Australia. Are you sticking with this one, or is this one?
Yeah, I mean, I do like the fundamental thesis behind this. I like, but again, it's being a slave to your process. I had a level where if we closed below it, I was out. We closed below it. I took my lumps here. Not a great trade. Almost moved against me from the jump, which happens to the best of us. So took my losses here, licked my wounds. I'm out of this one for now. But it's still definitely on my screens, definitely on my radar. If we can see some stabilization and maybe some momentum returning to this name, I would definitely be interested in giving it another shot. But for now, I'm on the sidelines. Took my lumps.
Jim, we always appreciate your opinion, especially on these important days when we get some inflation readings. Jim Tassoni, CEO at Armor Wealth Strategies. Thanks for joining, Jim.
Thanks, guys.
Thanks, Jim.
Thanks, Jim.
Yeah, I mean, real quick about the, any ideas that you have that you think that might work well in this environment. It's important to kind of go through them, and say, okay, this was an idea. Some ideas are going to work, some ideas are not going to work. And in this environment too, there's a lot of ideas that just the timing may not be ready yet too for the trade ideas too. So I think that's very important. It's a big takeaway that you should be doing too in this market, to say, hey, you're going to dip your toe into this, but we don't really have any confirmation considering this price action that we're seeing after the PPI report.
That nothing, makes me all feel warm and fuzzy inside after seeing this. Like if you would just told me that CPI was going to be light and PPI was going to be light, and the S&P was not going to rally on that, I'd be like, we got serious problems.
There's a couple things to watch for today too, as we're getting close to wrap up time. I did hear a headline earlier that that I guess Trump's team, not Trump exactly, but they've gone over to Russia and they're now there to negotiate the possibility of like a ceasefire. So you've got that going on today. So just watch out for headlines about that. And then and then there's another. It gets better. There's another overhang on the market, and that's in terms of whether there's going to be a government shutdown, and our Congress has to negotiate that by Friday. But I'm going to provide one silver lining stat.
Oh, we need it, Christian.
That comes from
please.
Ryan Dietrich. He said, looking at the past 20 years, March 12th is the last day of the year that has a negative average year-to-date return for the S&P 500. So he's basically saying that from here, things tend to improve significantly. So we can get past all the headlines, and if we could get past, the lackluster price action, perhaps some of that seasonality will improve.
Hope so. Ryan has been right before. We never doubt Ryan Dietrich. He's been coming on this show for a decade and giving us so much good information. He sometimes talks me off the ledge. So, that's good information here too. I have been, market neutral. I have been, talking about just selling rips, buying dips and fading and stuff. The rip selling is doing a lot better than the dip buying. I want to see today. I think today is a very important day. We need to see the institutional buyers. Maybe they're not at their desk yet. Maybe they're going to come in and say, hey, look, cooler heads prevail here. It's a light number. Obviously, this Russia ceasefire stuff, not having a ceasefire, maybe put a little bit ahead in the market to go when that came across. But I think guilty until proven innocent. I want to be bullish. I want to buy some of these stocks that are, looking. So I think, you can try maybe off the previous day's lows on stocks like NVIDIA. I think I would pick on tech again. Tech looks like it wants to rally to me here. I think I'd stay away from the value names for now. I know it's been a value year and people are still thinking like that, but I'm not so sure those are the names I want to be in at this point in time. I think I'm more inclined to be looking at the NVIDIAs on dips and some of the other stocks that have worked, because I still think AI is real. And I think at a certain point in time, some of these tech stocks are getting too cheap.
Well, I'm sorry that you did not. You mentioned that you were going to sell the RIP if we got one. You didn't even get a chance to do that.
Not
So,
really, no. I was ready to. I was like, finger was on the sell button. I was like, is that it? I'm like, this number's light. We're not getting 30 handles? No, didn't happen. It's okay.
Well, hopefully tomorrow we'll be getting a little bit more optimism with our guests. One of my favorite guests, Tony Pollock from Real Life Trading. He's gonna have some good words of wisdom, as he always does, on tomorrow's pre-market prep for the Friday. It's gonna be March 14th. Thanks for joining today, folks. We'll see you tomorrow. Good luck, everyone.